Hello, welcome back everyone. How are we doing today? As you can see, what we actually planned out yesterday kind of played out, and I'm gonna walk you through it one by one before we actually jump into this trade technically together. Okay, so the first thing I said yesterday was whereby we saw the market around this area. Okay, the market was still somewhere around here yesterday. Okay, when I said one, before I can jump into this trade, I would like to see the market come down at least to retest 50%, which was where it was yesterday. And I said secondly that before I can open this trade, I must see a break out of this flag pattern, a pullback, and a continuation, which is exactly what is happening right now. I'm going to show you that more clearly later. And lastly, I said that whoever wants to take a short trade, okay, probably you're trying to look for a quick short grab. Maybe you are an intraday trader, okay, you're a day trader and you really want to take a quick short trade. Okay, I said something that you can look for the price coming all the way back to the upside, okay, retesting the upper band of this channel. Then you can take a short trade to retesting this key zone, which is exactly what played out. I'm not saying I'm a unicorn or whatever. I'm just saying sometimes what you said kind of comes through in the market. That's why it's all probability. You have to think in probability, okay? Because you would never know what's going to happen or how the market is going to play out. You just say it and it will play exactly how you said it, okay? So that's why you have to be very attentive and you have to listen to what the market is saying, because most of the time the market is always saying something, okay? And there are so many times to interpret it with, or it's best and it's easier when you use just simple price action, okay? It's easier that way. So these are the three things that happened yesterday. And fortunately for us, we have the market back into what? Back into 61.8 Fibonacci retracement, which is right there. Let me just delete this first. Okay, so which is right here. Okay, 61.8% Fibonacci. The market tested yesterday before we now saw the breakout of what? Before we saw the breakout of this pattern, okay, of the flag pattern. We saw the breakout yesterday, which was really, really good. Okay, we saw the breakout. Actually, the breakout happened this morning, okay, during the, I'm guessing, Asia market. Yeah, it should be around the Asian market. So you can see the breakout happen. Now, I said I want to see a breakout of the pattern, which is right here, this candlestick. I said I want to see a pullback. This red candlestick kind of pulled back. And I want to see the continuation, which is this green candlestick. So what is the plan now? The plan is very simple. I want to see these particular candlesticks that is running currently. This 1 hour candlestick. You can see the time is 5:24 a.m. Okay, at the top right here, 5:24 a.m., right? So I want to see this candlestick close by 6 a.m. Then I will look, if it closes decisively up, okay, if it's a very good bullish candlestick, I will take a buy trade. But if it's a miniature candlestick, maybe a doji or a pin bar, I have to wait for the next candlestick, which is going to happen by 7. Okay, the next candlestick, which is the candlestick that will open by 6, it must close by 7 before I look for another candlestick. Provided that this particular candlestick, this stick right there, okay, it close bearish, okay, or it is a pin bar. I don't like pin bar for nothing. Okay, that's just my own personal opinion anyways. I just don't like it. I don't fancy it. So I really want to see a candlestick that is very green, very strong, something like this. Okay, imagine this pullback and then look at these two candlesticks that follow. Okay, those are the kind of candlesticks, they carry power, they carry finesse. Those are the candlesticks I like to trade, and that's exactly what I'll be looking forward to. If I can get it from this particular candlestick, this particular guy right there, then I'm good. I'm just going to take the trade. And don't forget, we're buying. And when I take the trade right here, buy, my stop loss is going to be here. And my target is going to be at least 2.5%, which is always my default setting. Okay, and I'm going to leave it to run. All right, I'm going to leave it to run. That's that on good for now. Okay, so let's check if we can get a flip side kind of trade. Okay, can we get a flip side? Excuse me, let me see if we can get a flip side. Is there anything flippy here? Okay, aha, another thing I would like to explain to you, you can see I added a very brand new indicator. It's not brand new, I've always had it. Okay, you can see I have 4 indicators all locked up there. Okay, but I use this indicator, all right, this 20 period indicator, because it is more simple and you can see it is almost invisible on the chart. And now I'm using this, the 50 and 200 period moving average crossover. Okay, MA crossover. I'm using both of them now because they kind of play into this trade. Okay, and first off, you can see when the market was ranging, you can see the indicator, both of them were confused. But the moment we saw the breakout and the 2-hour pullback, you can see the crossover happened. All right, and since then it's all been scattered. I like when the 2 moving average, okay, this crossover moving average, I like it when they're scattered, and you can see they're scattered right here, and this pullback now brings them back together, meaning that the market is currently using the 200 period moving average right there. So you can see the market is currently using the 200 moving average, okay, as area of what? As area of support right here. And it also confluenced with what? With this key zone. And secondly, it confluenced with what? With the 61.8 Fibonacci retracement. All right. So you can see right there, we have those multiple confluence right there. The 200 period moving average acting as support. The key zone right there. Okay. The structure, which is this resistance and now support. Okay. The key zone also acting as what? As a confluence, as the area of support, excuse me, and then 61.8 Fibonacci retracement level also acting as what? As area of support. So these 3 things are telling me that, okay, probably the market is ready to what? To keep going up, to continue the bullish momentum that started last week. I don't know, but I would really love to see this particular candlestick close bullish. Okay, this current one, you can see the market, the candlestick is currently showing a sign of doji. Okay, so I'm just gonna wait for it to close, then I will look for an entry right there. Okay, you can see the candlestick, that's what I'm talking about. If you take a quick look back to the 8-hour candlestick to check the overall chart, you will notice that we are still very much bullish. Okay, we are still very much bullish, and you can see the 200 period moving average is still acting. The price is still far off 200 period moving average. As a matter of fact, the 50 period moving average, let me make that a little bolder as well. Okay, you can see the 50 period moving average as well is acting as what? Is acting as area of support right here. Okay, which all makes perfect sense. Okay, though the market at a point break inside of it got very confused. Okay, but currently it is all back to using the moving average as what? As area of support, whereby the big daddy, which is the 200 moving average, was just flying at the bottom, keeping everything safe and steady. Okay, so this is why I actually use this crossover indicator, nothing more, nothing less, just to see the overview of the chart in an insight, just at the far away point of view, so I can easily see it and like, okay, this is what I'm looking forward to. I'll be looking forward to that. Okay, since I saw that is why it was there, and that's why I want to explain it. I'm gonna take it out now because there's no point in putting it there. I don't like too much indicator on my chart. Okay, I'm more comfortable with this 20 period moving average, and that's all. So back to 1 hour time frame, which is our entry time frame. Okay, I don't want to go too far. I think everything still looks perfect. The overview of the entire market momentum for gold is bullish, and we can see the pullback is almost over. As a matter of fact, to me, it's over. But I'm just looking for that tiny part, the last part of this particular candlestick closing higher. Okay, once it closes higher than this previous one, I'm fine. I'll take the buy. And lastly, don't forget we have core PPI coming later today. Okay, so you want to prepare yourself ahead. And since this is a swing trading plan, okay, we have CPI coming tomorrow as well, which is Wednesday. So you also want to plan yourself ahead of that. Okay, we don't know what is gonna come out. I don't know how it's gonna play out. I recuse myself from trying to speculate on how fundamentals actually play out a very long time ago, because it's more like I'm vexing my spirit and I don't like to do that. So I really recuse myself and I just wait for the data to be released and I plan myself ahead. Okay, but that doesn't mean I don't watch videos, I don't try to educate myself, I don't try to do some quick research, all right, from fundamentalists, people that are really good at these things. Okay, I do that, but most of the time I just wait for the data to come out, then I plan myself and I manage my trade. It's as simple as that. So that's where I'm going to leave you today. The market is still very much bullish. I'm not looking at any other flip side. There's no point in selling right now. But if you want to take a sell, of course you can take a sell. But where will you take the sell? I would say anything below this area right here. Okay, if the market, if peradventure, all right, the market dip down, okay, do some pullback to retest this key zone, and then there's a probability that it's going to keep going down, meaning that everything that happened here is a what? Is a false breakout. If this happens to be a false breakout, then you can take this short trade. This would be amazing. But for now, I'm staying bullish, and that is all. Okay, I'm going to catch you later. I've given you the flip side. You have seen my own side. Now, you have to choose. It's your choice. It's your money. It's your account. Do well and trade. Have a nice day, guys. I'm going to catch you in the next video. It's going to be on WTI. Bye and stay safe.